Yeah, that's tricky, right? I think the markets generally anticipate the Fed decisions. The Fed is generally good at choreographing or giving the market a heads up. Like really weeks before the Fed raised a quarter basis point, 25 basis points, we already knew that was coming. So I think the metal markets adjusted for that. The metal markets are more likely to move on geopolitical surprises like the invasion of Ukraine, at least in the near term. I think the longer term driver, the next 6, 12, 18, 24 months for the metals is really going to come down to, can the Fed get inflation under control?
And we wanted to have you on to give us an update on the precious metal markets first and foremost, with the crazy week we've seen really 2 weeks ago and then the consolidation we've seen. Do we still seem strong in the metals, in your opinion?
Yeah, so we'll take a look at the chart here on gold, and certainly you do have this beautiful breakout that we have seen. It's what I've talked about going back to kind of December, November of last year, that gold would break out. We have seen the breakout. Now the question is, what are you doing at this point? And the answer is, you basically came up to this double top, right? And so on a technical basis, this is a clear double top. It should push price back down in the near term, which is exactly what it's doing. My estimation is that we're going to trade back to about the 1860 to 1840 range, which would be kind of what we would call a retrace to the scene of the crime, which was the breakout, right? So based on this trend line sloping down, you broke out above it right here. So price should come back right in that range. And once we get there, I think the next big leg on gold does start. I do think it takes out the double top high. And I really think, again, and I said that gold would be the best performer in 2022 versus the stock market and Bitcoin. And I still think that's going to be the case. I think gold by year end will be up significantly from this area. So, yeah, really fun to watch. I love watching the charts play out, and it is exciting. There's no doubt about it.
So it seems like what you're saying is we are headed for a further pullback here. So if people are looking to jump in, would you recommend maybe waiting a bit?
Yeah, I think it depends on your time horizon, right? So if you're someone like me who's a shorter term investor, then you do want to make sure you try to get close to the lows. But if you're someone who has a 5-year time horizon or even a 3-year time horizon, I don't think, the difference of $50 on gold makes that much of a difference. So again, I think in each individual, like I run the risk of missing the trade, but I'm a short-term trader, so there's always another trade. If you're someone who has no exposure to gold at all and you're a longer-term investor, then by all means, I think this is a good area to accumulate as well.
And then your take on silver at the moment.
Basically, silver also had a breakout, a beautiful breakout. You can see same general chart as gold in that it broke above a key trend line. Same thing for me as a trader, as a swing trader, I'm looking for a retrace to this area, which is just below $24 an ounce. And then I think, again, at that point, you're going to make a push up and probably test this high from 2020. And this high was also tested over here when the Wall Street bets crowd tried to squeeze silver, and it just obviously didn't succeed. Silver was a much too big market cap for them. But I do think it does test that again. And if at some point it does break, that's where you get the big squeeze in silver. And I think it's important to look at the differences between gold and silver, right? So if we quickly flip back to the gold chart here, gold has already retested its 2020 highs, right? So you have this high up here, and you obviously tested it, and you're pulling back. On silver, you see a little bit weaker price action, which makes sense to me, right? So it's not at the $30 level, even though it's broken out. And the thought process of why, to me, it's because if the Fed is really raising rates, then it's going to slow the economy. And that's going to take a little bit away from the demand for silver, since it's also an industrial metal as well as a store of safety. So just be aware, I still think silver performs well, but there's a reason why the charts are slightly different, from one testing the 2020 high and the other not quite getting there yet.
Now, do you see the next silver squeeze being driven primarily from retail demand for physical silver, or mainly like Wall Street traders?
Good question. That's a stumper. I think my guess is once we break above the $30 level on silver, that's where the retail crowd will really go in. What I've learned in my trading career, investing career, is that smart money, meaning big money, and it's not to say small investors aren't smart money, it's just they don't have as much information. They don't know necessarily the trends until it becomes hyped. Just like Bitcoin, if you look at the average investor in Bitcoin was buying in at 50, 60, 65,000 versus you could argue that bigger money was accumulating prior to that and then selling into them. So I think big money accumulates below $30, and then once it breaks 30, everyone on Twitter goes nuts, and that's where you start to see the small investor really chasing the trade at that point.
No, we also have seen some volatility in the platinum market. Do you have any thoughts on that?
Platinum obviously is interesting with Russia involved in a lot of the supply there as well. The platinum chart has seen quite the pullback here. So the number one thing I would see is if you take this high right down here, that would give me a good basis for where I would start paying very close attention to a major breakout on platinum, right? So this trend line going back to the 2008 highs connected to this high, and you can see you're still about $200 below that level. But on platinum, that's not that big of a move. I mean, we've seen bigger moves occur in a week or two span. So if you can get above this 1230, 1240 level, then you're in big breakout territory, and upside could easily take us to 1800, maybe even back to that 2008 high.
Now, would you say, with respect to what we saw from the Fed last week, would you say that is going to impact the precious metal markets that much?
Yeah, that's tricky, right? I think the markets generally anticipate the Fed decisions. The Fed is generally good at choreographing or giving the market a heads up. Like really weeks before the Fed raised a quarter basis point, 25 basis points, we already knew that was coming. So I think the metal markets adjusted for that. You know, the metal markets are more likely to move on geopolitical surprises like the invasion of Ukraine, at least in the near term. I think the longer term driver, the next 6, 12, 18, 24 months for the metals is really going to come down to, can the Fed get inflation under control? If they can't, then metals are going to go much, much higher. If for some miracle, and I say miracle because I'm a doubter here, if for some miracle they get inflation back to 2% or under, then the metals are going to struggle. But I just do not see that possible, because with the Fed needing to hike here, they're going to slow the economy, and it's going to be they're not going to be able to raise enough to bring inflation down without tanking the economy into a full-out hardcore recession. And so I don't think they'll ever raise that much. I think that the market's anticipating 6 hikes this year. I'd be shocked if they even get 3 in or 4 in before the market gets too low and the economy gets too weak.
We see that inflation is continuing to rise. How high do you see it getting if the Fed can't get it under control?
Yeah, so that's a good question. So I think inflation probably I think the PPI recently was about 10%. So my guess is you see a little bit more upside because of the recent spike in oil. So oil, the PPI number, I don't believe factored in the recent pop in oil, because it's usually a lagging something. It's like of the last month. So I do think you're probably going to about 12%. But I do think at that point you'll start to see inflation coming in. And the Fed will be lauded, right? People are going to say, oh, look at the Fed, they're bringing in inflation. And it's going to come down to probably 5% or so over the next 12 months. And then I think it's going to start to be here to stay. And I think you have years of higher inflation than the Fed wants. But the problem is the economy isn't going to be able to survive with 4 or 5% or 6% interest rates. And therefore, the Fed is just going to have to figure out, OK, which is the worst case here? Do I want to leave inflation high, or do I want unemployment? Inflation comes down, but then unemployment jumps because we're hiking rates. And it's a conundrum. It's a mess. And it's going to be something that the Federal Reserve is going to have to deal with for years and years to come.